What's going on, guys? Today we're doing an update video on a company called Foresight Autonomous, or ticker symbol FRSX, because their stock price has been on a roller coaster of ups and downs the past couple weeks. Right now, the stock price is trading around $6 a share with a 35% decrease this past month. However, the good news is they are still up over 800% for the year. On my last video I did on this company, the stock was trading around $10 a share. And back then, my position was a general hold because I needed to see bigger things or better things to come out for this company for them to really be successful and for me to buy in more stock. So here's why I'm thinking about possibly adding shares to my portfolio now. The number one reason is the price is really low compared to what it has been, and it's very tempting because it has a low buy-in price. And number two, we all know that 2020 was one of the best years for electric vehicles, and it made people a lot of money in particular companies. Obviously, electric vehicles are here to stay in some sort of fashion and will continue to expand with a projected 50% growth in 2021 alone. Now, guys, when you start looking or researching into electric vehicle companies, nowadays they all seem to have one thing in common, whether it's a new startup company or if it's a company like Tesla that's been established for a while, they are expanding into self-driving capabilities. And this is exactly where Foresight Autonomous comes into the picture. With pretty much all the major car companies looking to have their own self-driving vehicle at some point in the near future, they need the product of companies like Foresight's technology to help make them safe. In short, here's what they provide. Foresight's technology scans the road ahead to foresee possible collisions with vehicles, pedestrians, animals, and other obstacles you may encounter in the road. The technology can be customized to address the challenges of ADAS, Advanced Driver Alert Systems, and autonomous vehicle markets, including object detection under diverse road, lighting, and weather conditions. The ability to utilize stereoscopic, thermal, multispectral, automatic calibration, and 3D point cloud technology all together in one product really puts them in a great position to be utilized with these self-driving capabilities or the demand of that self-driving capability. But here is where it gets interesting for them moving forward. In an article published by the Motley Fool, Foresight said that iNet will begin a pilot program with the Intelligent Transport System division of a multi-billion-dollar global Japanese vehicle manufacturer to test iNet's accident prevention system in the automaker's smart city. The idea is that vehicles equipped with this V2X system can sense one another and automatically communicate to help avoid collisions. Now, Foresight didn't come out and identify the automaker, but guys, it should be noted that Toyota announced last year that it was building a 2,000-person smart city near Tokyo called Woven City, the sole reason to test autonomous vehicles and related technologies. Although this is speculation, but where there is smoke, there tends to be a fire, meaning this could be a major partnership or a major deal if it's successful with Toyota, really putting Foresight Autonomous on the map and way ahead of their nearest competitors. And then to help sweeten the pot as far as financial tokens and getting Foresight on the map, Foresight's affiliate RailVision just received 2 contracts with a German light rail company. And guys, I'm not even going to try to pronounce or say the names of these companies. Anyways, it is a deal that could bring in $500,000. Foresight should be noted that it owns almost 20% of RailVision. And when you look at the light rail industry, it's projected to be a $10 billion industry by the end of 2027 alone. So there's definitely some growth in this sector and a way to bring in some much needed revenue for companies like Foresight and RailVision. So let's get down really to the future or what the overall outlook looks like for the company. A recent article on Seeking Alpha had a good overview of the company that I found and really sums up my opinion of it as well in general terms. Basically, in short, Foresight needs to emerge from the research and development role and the arena that they're playing in right now and secure a big time contract to really put them on the map and get them moving forward. You know, although their technology is very innovative and definitely a game changer in this industry, they still have to compete with companies like Google, Ford, even GM, who have produced similar technologies for these self-driving cars. So overall, guys, my position is still a hold, even though that stock price is so low. because I mean, it's not that I hate the company. I really like this company. I like the product they offer. But right now, because they're still in that R&D stage, they haven't secured a major contract, and they really haven't started bringing in revenue. So until I see some better numbers from this company or a better outlook for them, I'm not going to really put a lot of money into them as an investor. When you start looking at some of the analysts, a lot of the analysts are saying the same thing, that once Foresight gets to where they're bringing in revenue, the projections right now are really only around $30 to $40 million each year in annual revenue. Of course, a decent sized contract deal with a major car company could definitely change those numbers and help send, as the cool kids are saying, the price to the moon. But you know, there are several other options out there in terms of making money off Foresight. Most of my stocks are long-term plays, but there is potential to make some money in the short term with this particular stock. As indicated on the stock charts, this price has jumped up almost $11 a share and back down and then back up again. So my advice on this is, if you're in the short-term play, definitely use that stop loss option. I personally would set it around $8.50 to $9 a share, depending on what your buying price is, because obviously if it hits $11 a share and it drops back down, you have a stop loss at 9, but you bought in at 6, you're definitely turning a $6 share profit. You know, obviously those numbers are going to fluctuate depending on what your average buying cost is. So if you do play short-term play, give yourself some security, give yourself a little bit of a safety net, and use that stop loss option. And of course, let me know in the comment section. I would love to see if you're a short-term player or a long-term player in this. Really, why or why not? You know, maybe something that I haven't covered that may be a better outlook for the company in the long term. I would love to see that and really help myself and other people make a better investment decision. And also, guys, don't forget to check out the free goodies in the links below. We have our Discord up and running. There's several other things where you can do a referral link and get some free stock, get free money, get free Bitcoin. The list goes on and on. It's all about free right now. That's it for me today, guys. I hope you enjoyed the video. Please consider liking and subscribing. I hope your stocks stay green. I hope you stay safe, and I'll see you on the next video.